So till now we have learned the concept of depreciation, the determining factors and objectives of depreciation, and how to calculate the cost of asset. In that we learned the concept called capitalization of expenses. The next step we are going to learn is the two most popular methods of depreciation, that's SLM, which is straight line method of depreciation, and WDV, that is written down value of method of depreciation, also called as reducing balance method of depreciation. So let us first deal with straight line method, which is also called as fixed installment method. One of the most simple methods to understand. Let me recollect the same example which we learned in the previous video regarding the photocopy machine, where the cost of asset at which we bought was 22,000. 2,000 was the scrap value and useful life was 4 years. So we calculated the depreciation as 22,000 minus 2,000 divided by 4 years, which came to 5,000 as annual depreciation. Then we converted that into words and we calculated the formula of cost of asset minus scrap divided by useful life is the annual depreciation. In fact, we have already learned the SLM method. This is nothing but the formula for calculation of depreciation under SLM method. The unique thing about this method is that the amount of depreciation remains same every year. In our example it was 5,000 every year and we charged depreciation for 4 years. We can also calculate the rate of depreciation. Rate of depreciation is nothing but depreciation expressed as a percentage of original cost. Okay, so in this example, our depreciation divided by cost of asset into 100 will give us the rate of depreciation or depreciation percentage. So let us substitute with figures. So we calculate the amount of depreciation using the above formula, that's 5,000 per annum, that's annual depreciation, divided by 22,000, which is the original cost, into 100 will give us 22.73%. This is our rate of depreciation. You will keep on applying 22.73 on 22,000 every year to get 5,000, almost 5,000, because we have rounded off to 0.73. So you will approximately get the amount of 5,000 every year. The point to be noted here is that in the denominator it's 22,000, which is the original cost. Do not deduct scrap value from this, because in the numerator you have already calculated depreciation. That means you have considered scrap value in the above formula. So in the denominator for rate of depreciation, always take the original cost, do not deduct scrap value. Next, we are going to learn the next method, that is written down value method or reducing balance method. Rate of depreciation is applied on WDV and not on original cost. Few minutes ago we learned under SLM that the rate of depreciation is applied on original cost. Under this method it is applied on WDV. Now let us try to understand what is WDV. Written down value means the value of the machine in the balance sheet or in the books of account after deducting the amount of depreciation from its previous value. So whatever is the value of machine minus depreciation, the answer which you get is called as book value or WDV or written down value. The rate of calculation of rate of depreciation under reducing balance method is quite complex. It requires a scientific calculator or reference to complex mathematical table. So usually they will not ask you to calculate rate of depreciation under this method, that is reducing balance method. Nevertheless, we can at least get introduced to the formula. It's 1 minus n, the whole under root, residual value, that is scrap value, divided by cost of asset into 100, where n is the useful life. So you can just remember this. We will not go into the details of how this formula has been derived, because it requires a lot of complex mathematical calculations. Let me illustrate how this rate of depreciation will be applied in the books of account. So let us assume that the cost of asset is 1 lakh and we buy this asset on 1st January 2010. Okay, and we will apply depreciation at the rate of 10% on 1 lakh, so which comes to 10,000. Now let me tell you that whether it is SLM method or WDV method, the amount of depreciation will remain same for first year, because in both the cases we will be applying the rate on the original cost. There is nothing called WDV for the first year. So 1 lakh minus 10,000 comes to 90,000. This is called WDV on 31st December 2010. We just discussed about the meaning of WDV few minutes ago. It's 1 lakh minus 10,000. The answer which we get 90,000 is the WDV, also called as book value. This will be shown in the balance sheet. Again, next year we will apply depreciation at the rate of 10%, but please note that this time we will apply 10% on 90,000, that is the WDV or the reduced balance, and not on 1 lakh, and this makes this method different from SLM method. So 90,000 minus 9,000 comes to 81,000. This is the new WDV as on 31st December 2011. Less depreciation for the third year at the rate of 10%. This time you will apply on 81,000, not on the original cost, which comes to 8,100. 81,000 minus 8,100 comes to 72,900. This is the new WDV on 31st December 2012. If you notice, the amounts of depreciation kept on reducing under this method. First year it was 1 lakh, then 9,000, and then 8,100. So amount of depreciation keeps on reducing under reducing balance method, and amount of depreciation remains constant under SLM method. Next, let us jot down the points of difference between SLM and WDV to get more clarity about both the methods. We learned that fixed amount of depreciation every year under SLM, amount of depreciation reduces every year. Alright. Asset value becomes 0 or equal to scrap value. Let me elaborate this. When you charge depreciation of 5,000 in the example of photocopy machine, we charge 5,000 for 4 years, so the value of machine, that is book value, will drop down to 2,000 at the end of 4th year, which is exactly equal to the amount of scrap value. If there was no scrap value, then the WDV will become 0 under SLM. So can I say that under this method, either the asset value will become 0 at the end of the useful life, or it will be equal to scrap value. But this will not be the case under WDV. Asset value never becomes 0 because you keep on applying rate of depreciation on the reduced balance, on the WDV. So don't you think the amount of depreciation will keep on reducing at some point will arrive where the amount of depreciation will be negligible, maybe 5 rupees, 2 rupees, where you have to compromise and simply write off the entire depreciation, say 100% in the last year, just to forcibly bring the WDV to 0, because it will automatically never come to 0, unlike SLM method. So this is the point of difference. Next, impact on P&L account, depreciation plus repairs is equal to increasing trend. Now let me elaborate this through an example. Suppose, taking the same example of photocopy machine, where there were 4 useful years and we charge depreciation of 5,000 every year. Now we all know that repairs keep on increasing as the machine gets older. When the machine is new brand young, we require less amount of repairs and maintenance, but as the machine gets older, the repairs increases. So let us assume that in the first year the amount of money spent on repairs were only 1,000, then 2,000, 3,000 and 4,000. Now if you look at the overall impact of depreciation and repairs on profit and loss account, let me tell you that depreciation and repairs both are expenses, but depreciation is a non-cash expense, repairs will be a cash expense, but both will be debited to P&L account. So if you check the overall impact on profit and loss account every year, in the first year we will be debiting P&L account by 6,000, in the next year 7,000, then 8,000 and 9,000. So can I say that under SLM method, the overall impact of depreciation and repairs on profit and loss account will have an increasing trend. It increased from 6,000 to 9,000 over a period of 4 years. Whereas under WDV method, if we charge depreciation, we learned that the amount of depreciation keeps on decreasing in WDV method. So let's say first year that depreciation was 5,000, then 4,000, then 3,000 and then 2,000. But the amount of repairs will keep on increasing as the asset gets older. So 1,000, 2,000, 3,000 and 4,000. Now let us check the overall impact of depreciation plus repairs on profit and loss account. It's 5,000 plus 1,000. In the first year it is 6,000, second year 6,000, third year 6,000, fourth year 6,000. So can I say that under reducing balance method or WDV method, the overall impact of depreciation and repairs on P&L account is constant? Okay, I hope you got this. So here I say that impact on P&L account is equal to almost constant. This leads to one more point. Can I say that the SLM method is suitable to assets with negligible repairs? If there are no repairs for a particular asset, then I think you should go for SLM method, because the overall impact on P&L account will remain same, because repairs will be zero and the amount of depreciation will remain same. But this is a rare case. I don't think there is any machine or a fixed asset which does not require repairs. So WDV is suitable where repairs increase as asset gets older. And that's why WDV is more popular than SLM, because most of the machines will face repairs and the amount of repairs will keep on increasing as the asset gets older. Next, the rate of depreciation. We already learned how to calculate rate of depreciation under SLM method. It's depreciation divided by cost of asset into 100, and whereas the formula for calculation of rate of depreciation WDV is 1 minus n the whole under root residual value divided by cost of asset.